And now, I would like to introduce everyone's favorite author and one of our biggest fans, Peter Grandich. Peter, the stage is yours.
Good morning. Come on, I know it's the third day. Good morning. All right. So first, let me begin by thanking Almighty God for the grace to be here. 18 months ago, I didn't think I'd be standing, let alone after 11-year absence, be speaking at a mining conference again. I also want to thank your host. I let her know in the back I must have done 300-400 conferences over 25 years, literally once a month all around the world. And I've never seen one run better, and I've seen a lot of them run worse. So I would make sure that you let them know that. And the old saying, next year, bring a friend or two, so it can only get better. I want to just talk about 3 topics in the time frame that I have. And I'm trying to see, where is my clock so I know when I'm, oh, I see it, gotcha. I want to talk a little bit about the metals and mining industry because I had left it, and I think by leaving it, I've had a better chance to look at it for those who've been in it and stayed in it to give a real honest appraisal of where it's at. The second thing I want to talk to you about is 5 factors on why this past March I told my clients, I'm still part of a financial planning group just for US residents, on why I felt it was time to build a financial ark. And then finally, I'd like to close and talk to you about the 40 years that I've been in this and what this has taught me. First is to know that from 1988 to 2013, one of my 2 primary businesses was in the metals field. First as a financial advisor, then a portfolio manager of a mutual fund, and 4 hedge funds. I went on to become a newsletter writer. In fact, in the States, I used to write a letter called North of the Border, because I used to think at that time Americans were missing an opportunity to invest, at the time, its biggest 2 trading partners in the world. I went on to become a corporate consultant, but in 2013, I managed again for the second time to lose 7 figures in the metals and mining industry, and I thought maybe it was time to do something else. I was also a sports manager. I dealt with many NFL and NHL players, and I decided that was a lot easier to do, which I thought, than stay in the mining business. So for about 3 or 4 years, I wouldn't even know what the price of gold was on a given day, when I used to know it from the moment I woke up until the moment I went to sleep. However, when I looked at the metals and gold was around 1,200 or something, and I thought that was awfully low, I looked at some of the shares and they were awfully low, even though they got a lot lower over time. And a good friend of mine from Vancouver called up, told me about this deal in Quebec. I think you should get in it. I did. And within a few months, I found another great lesson that I learned about mining. It's all about management. And if you have bad management, you could have a great project, but it's going to be a struggle. And so I became somewhat of an activist and was able to get the president and one other person to leave. And that afternoon, literally after it ran out in these chat rooms, I got a message from this man that was a former major portfolio manager in Canada himself and was a director of a company who was trying to do a deal with that company. And he wanted to speak to me how I managed to get this guy out when he couldn't. So at least for one time, I was better than that guy. Probably be the last time. But anyway, this gentleman was very involved here in Quebec as both the director, as an investor, and eventually went back into the money management. And before long, I started to invest, particularly in uranium. Now, I had never invested in uranium, even when I was a portfolio manager, because I always thought the market was way, way too small. And there were just too few producers. But the argument, and we were on the verge of this revolution for electricity and electric cars. And so I came very involved in that. And then by talking about it on a Twitter page, which was originally set up just for our clients of our planning group, Before long, there was 1,000 followers, there were 2, there was 6, there were 8, and going to 10. And so more and more I became involved in it. And I wanted to tell you all that so when I start to tell you now what I think of the industry, you at least understand where I'm coming from. I think there's 3 critical things to understand about mining, and in particular the junior resource industry right now. First of all, it's not anything that it once was. I think you have to accept that. And how I know that is, at shows like this and all the ones from the Vancouver-based ones that ran through Canada, through Sandy Lawrence's shows throughout the US, to all the ones that went to London and all. At shows like this, there were hundreds, sometimes thousands of financial advisors. He or she built a part or all their book of business around mining shares and junior resource stocks. So you, if you're a junior resource company and you got that person particularly interested, you got parts, if not all, of their clientele. They were the end user. Those were the people that bought the shares at the end. That has become a dinosaur. There may be 1 or 2 here in the room. There may still be a couple at all the other shows. But building a book of business through commission-oriented is a dying art. If it's not dead, it's terminally ill. The problem with that is, along with that, the intermediary person who would get the final interest to a mining company's stock is gone. And even if all those same amount of people who used to buy are still out there, and I don't think they are, and I'll tell you why in a minute, you now have to reach them directly, almost on a one-by-one basis. So from a marketing standpoint, I tell investors in this industry, it's much more difficult for a junior company to find investors, especially on the retail and on the end. And I think I can make that same argument, I won't waste too much time on it, even institutional. Because if you look at all the desks that used to exist, every major brokerage firm that had any type of name in Canada, and even throughout the United States, had what we would call a mining desk. And there would be multiple players on there, including sales folks. Most of those people drifted away for one reason or another, and into one area that really has been the killer to the junior resource market. And what's left there now is perhaps an older folk guy like me. He knows what's talking about. They're not sending him new money, but he holds the hands of whoever may be left. But what really has hurt the junior resource market, and it's going to be a challenge for at least the foreseeable future, is competition. And the competitor by far that beats all others combined is the cryptocurrency market. Now, before you say, oh, this guy's going to talking about crypto, I dislike it so much, I call it Bitcoin. I don't call it Bitcoin. But I will tell you this, even the tulips are jealous of what Bitcoin has managed to do and convince people that somehow it's a worthy investment. And I'm not here because we don't have any time to discuss it, and I don't really want to discuss it because it only causes aggravation for me at this point. But it is a force that has prevented a type of investor that normally would have shown up in some form into this end of this speculation of a market. And those 2 combinations alone are very, very critical to what's happened here. Now, there's a couple other things. Exchange-traded funds. It's good if you're one of the companies in it, but if you're not, it's almost impossible to get what's left of institutional interest, particularly in the US, because of the lack of liquidity and the other thorn to our industry, the overreaction of regulatory views. Yes, it was the Wild West. Yes, I remember standing in front of the guy at Briex a week before a PDC, before he was thrown out of a helicopter. It did change. It was the Wild West. And it did get much better. But there's been somewhat of an overkill to the point where in the US now, even if you have an OTC symbol, most brokerage firms won't even allow their advisors or discount brokers to have an unsolicited order for that stock. That was another marketplace where juniors would find end users and interests. And I also try to tell this to the public at large that may be in here. So maybe you need to ease up yelling at your junior resource CEO because it's much tougher for them to do the job on the marketing side of things. A couple small little things. I'll talk about metals and then I'll talk about my building the ark. the little or no commissions that now exist is critical because it's shrunk the amount of time that a particular shareholder might have stayed with you otherwise. You know, when you used to buy $5,000 worth of a stock and you paid a $200 commission, you didn't trade it for a penny or two. But now with no commission, people have become short-sighted. But where they've really become short-sighted is because of social media, in particular Twitter. There are chat forums, and they get mad. Apparently, Pito a couple yesterday, because I talked about one of the companies, that where there'll be 50, 60, 100 posts that day, all about what's wrong with the company and all. And guess what? Next day, same thing. Next day, same thing. I try to tell those people, not even IBM has news every week. You can't expect that to be the same for a junior resource company. So too much time spending too emphasis talking about things, create people false impressions, and it's like that game, we all probably played it, I don't care what country you are from, if you remember when you were in nursery school, whatever, somebody would whisper a sentence at this end, it would pass through 12 kids, and by the time I got to the other side, it was completely changed. And that's what the internet has come, in my view, to talking about stocks and all. The other couple things that I think are important for those of you in the industry, the financial service industry in Wall Street, who, by the way, most of them, you can throw them off the top of the Empire State Building and all the way down, they all say the same thing, hey, so far so good. They hate or dislike metals. And the reason they do, it's kryptonite. Their livelihood is stocks and bonds. So to expect the general financial community to get big believers in gold or anything like that goes against their principle. And I always tell investors, stop trying to turn on tout TV. All right, you call it CNBC TV, I call it tout TV, and expect regular people coming on there to talk about metals. It's not going to happen. And here's why I know how unfair they are. Copper went up 25% in 6 weeks. It went from $4 to $5 in less than 2 months. That's 25% no matter what country you're in. That's like the Dow going from 40 to 50,000 in 6 weeks. If the Dow goes from 40 to 50, you'll hear it everywhere in anything. Did anybody hear anything about copper outside of your little world of metals in any financial spectrum? No. And that's why I try to tell people, we work, or if you're involved in here as an investor, we're within an industry that doesn't get the same fair shake from the general financial community that other type of industries do. Quickly about the metals. I was a huge bull first on uranium, then on gold, and then on copper. We've seen the biggest part of this move, but understand this move is beyond anything we've ever witnessed in the 40 years I've been involved. The physical demand so overwhelmed that the paper market, where lots of people played the downside of gold, I've always called them the Crimex at the COMEX. I'm not the first to do it, won't be the last. But the paper market, which used to stymie, stop, or turn around bullish moves in metals, were overrun. They are badly wounded, and I never expect them to be able to control the market again because the physical interest in the metals now comes out of Asia. It's not out of London, and it's not out of New York. And there, unlike here, or especially in the US, people have such ethnic beliefs in metals and the reasons that they support it. But I think it's a lot bigger. I think the single biggest purpose is, for what I'm going to tell you in a minute of the 5 factors of why I think you've got to build a mark, is that there are countries been physically buying gold because they expect 2 things. They expect the eventual fall or more deterioration of the US, both monetarily and economically and politically, and a formation of some sort of trading among themselves, which I'll discuss in a minute, that will eventually need to offer something more than the competitor does, the dollar, and therefore something of hardness or people can count on. And so I believe eventually there'll be some sort of gold usage in whatever that'll come, and I'll speak more about that in a minute. In terms of junior stocks, I learned a hard lesson yet again. The key to this industry is management. There's a guy I know, he has a very good saying, you can change management, but you can't change geology. And I learned that, thankfully. I had a company that had tremendous geology, but questionable management. That management is now gone, and thankfully, we went from single A management to major league starters. I'll just say to you that you need to look at management as every bit as important as where the project is. Now for me, and I won't get in trouble at this conference because most people who are in the business are basically mining and exploring in North America, but I have limited my personal investments to North America. I'm not going south to Miami, so if they find it in Key West, I'm not even going there. I believe there's too much political and social risk now and other challenges around the world to where 20 or 30 years ago we could have been at a conference, spin a globe, hit our finger on that point in the map and go, yeah, we can go mining there. I don't think that's the case anymore. I do think for the first time that shares will perform as well, if not better, than the underlying metals. But keep in mind, we have a very limited audience. And unless the audience expands, and you'll ask, maybe the follow-up would be, okay, Mr. Grandich, how does it expand? One, the eventual recognition and the bubble burst in the cryptocurrency market. I believe it's coming, but it has to happen before we would retain those people. And two, the general equity market, especially in North America, where people are still mostly invested in it. In our financial planning group, especially when I used to deal with athletes, 98 or 99% of the portfolio was related to some financial asset. Few people have very little exposure to commodities yet, and lower-end mining shares and juniors. As those things change, which I'm hopeful they will, so will the interest in this market grow. Okay, I have 7 minutes to go through the perhaps most important thing that I've ever shared in my career, and that is, it's come time to build a financial ark. For my followers, my clients, I believe there's 5 key reasons. I'm not going to have enough time to go through them. I'll just touch on them. The first you've heard about for years, the debt. But now the debt is at an insane level. We are physically getting to the point where servicing the interest rate and the interest that we're owed in the United States is becoming a challenge. And I know that because finally, both business titans and Wall Street titans are speaking about it. Our Congressional Budget Office says in less than 7 years, we're going to be at $54 trillion in debt. Put a 5% interest rate on that, $2.5 trillion in interest, and know in 2022, America had its best year in revenue, $5 trillion, $300 billion. That'll grow a little, but we're going to see interest expense go almost up to half of everything we take in. And of course, I have a government right now that's killing our best asset. Most Americans don't know, the largest asset the United States owns on its books, 27%, is student loans. What is this current administration doing? It's forgiving some people that have that student loan. Great, you forgave it. That was income that we were going to get for taxes. So what are they going to have to do? They're going to have to raise taxes more to make up for that. Who are they going to raise it up? The idiots like me that paid my kids' college education all the way forward. Big, big problem coming with the deficit. The second is a retirement and aging crisis, and there's a separation. 65% of Americans right now work paycheck to paycheck. They're never going to get to those beautiful commercials where you retire to Florida, you play golf, the wife sits at the pool. It's not going to happen. And they're going to become more and more of a burden because as we get older, trust me, things become more difficult to do. On top of that, and within 2 years, the boomers will have peaked, and there'll be less and less boomers because that's still where most of the wealth is. The wealth will shift to who they leave their legacy to, And those people are going to be the ones most burdened by taxes, and they're going to point to the old guys like Grandich that are then 80 or 85 and want hundreds of thousands of dollars of care for Medicare and say, wait a minute, I can't even put food on my table. You want to raise my taxes again so this old geezer can get some type of medical coverage? No, it's best he go. And somebody says, that's terrible. Governments would never treat seniors like that. Well, unfortunately, both our governments are now. Here in Canada and 3 states in the US, soon to be 7, where old people who are suffering both medically and are basically poor are being encouraged to take their own lives. That's the truth. And I think, unfortunately, it's a sad state, and I think it's only going to get worse. The third is, for us, I call it a foreign economic invasion. The illegal aliens that are coming to the United States, many of these people are just trying to come for a better way. I truly believe that. It has nothing to do political. Yes, some of them are going to be bad people. Yes, there's going to be trouble. But the one thing we do know is most of them are coming with just their shirts on their back. And they're going to need, and are getting at this point, financial support. And a lot of that financial support is going to come from people that otherwise used to get it in other means. And that itself is going to cause a problem. So even building a wall now, if the next guy that was in gets back in and says, well, we got to put a wall. If I'm those people and I'm seeing what I'm having here versus what I had here, not only am I not want to go back, but I'm going to call every friend and relative and tell them I think you should get here too. So a wall will no longer stop it unless the decision is to reverse it and take the people that are supposedly illegal and force them out. This will continue to be a bigger and growing issue and an economic strain that a country that can't afford it. Last two, this is the thing that Wall Street is missing. It's, to me, going to be the biggest surprise to the don't worry, be happy crowd on Wall Street. Their inability to understand what is happening with the BRIC nations. If you don't know about it, B-R-I-C-S, you better learn about it. It's going to, when it's all said and done, in my view, it'll be as important to world trade and how it's done as the Industrial Revolution was. And what I say to the novices down, the young financial advisors that stand up and tell me, it's only these countries or whatever, remember, those countries were dealing with the United States economically and using our money. Now they don't want to do either. Please tell me how in the future that's positive for the United States. And finally, the fifth, political paralysis. Now, I'll make a joke. I say it publicly, and I hope I don't offend you, but I believe if Canada and the United States traded their leaders, we both think we got the short end of the stick. So I can't speak to the political paralysis here in Canada, but I can tell in the U.S. it's there. Both parties don't work with each other, don't want to work with each other, don't want to be in the same room with each other. And now they each have a splintering party within them that's moving further away from their middle. And those are the groups that are going to be called upon to supposedly solve these issues when they come acute. Okay, I have 2 minutes, so I'm going to close with this. I've lost millions not once but twice. And I can tell you that I learned a couple of things. Those of us who look into a crystal ball for a living, the only thing we become experts on is how to eat a lot of broken glass. The key to life is what kind of H you're going to wear on your chest. If you're in the financial service business, you tend to wear a hubris H. If you're in long enough and you're fair enough to yourself, hopefully it will change to a humble symbol. The financial service industry has become one big casino. Half the money is in passive funds, it's not actively managed, and the other half, 80% of it's being driven by some sort of computer algorithm program. Less than 20% is what the market was when I first entered, individual people buying into part ownerships of businesses. If you don't understand that, you're just asking for trouble. Wall Street is basically a museum. If you turn on CNBC and you see them sitting there, that might as well be a museum. Most of the trading happens elsewhere. I'm out of time, but I do want to leave you with this. My advice to people, doesn't matter where you are in the world, less is more. 70% of Americans live at least one lifestyle or two above their real true finances. Debt is the dirtiest four-letter word in the world, and it's best to be a live chicken versus a dead duck. And to know that I'm standing here after where I was in the status in my life I need to say these two things, so if I go a few seconds over, forgive me. There's 3 stages in life: going in the forest, and coming out of the forest. The only one that's half fun is coming out of the forest, but the bad news is you already know you can see the other forest in front of you. And in life, there's only 2 types of people: those who are a mess and know it, and those who are a mess that don't know it and don't want to know it. So if you think you're a mess, God has blessed you, and I thank you for this opportunity to have spoken to you.